Rohr here with an early, concise highlight on Wednesday, March 4th, 2015. It's currently 7:30 a.m. U.S. Central Time, and we're coming to you a bit later than usual because we wanted to see the U.S. ADP number, kind of important in front of the U.S. employment report on Friday. And we'll get back to that in just a moment, but so far, a lot of the data out there is still very mixed. And what does all this mean to the markets? Well, the markets really just didn't like the weaker sentiment out there and possibly reacted a bit to the discussion yesterday and the speech by Israeli Prime Minister Netanyahu, because it weakened off quite a bit from that recovery right back up to the bottom of the 21.15 to 17 resistance that it put on Monday, gapped lower, and ended up with a significant slide during the day, all the way down to 2095 early, and then stabilized back up here. Right now, we're off 6 again, sitting right at 2099. So that's very interesting. And what we have to keep in mind is that once you would be below 2100, the holding at 95 was very interesting, but that bigger support is still around 2090 to the old high from back in December, made by the March contract, the old lead contract high at 2088.70. So that's the level to keep an eye on. And much as with the nervousness a week ago Friday on whether Greece and the EU would come to terms on extending the Greek loan agreement with some further bailout funds available, the market dipped below it temporarily, so you have to see if there's sustained activity back below it. We'll see a bit more about why that's important on the intermediate term charts in a moment. So those are your lower supports. Basically, yes, a trading low at about, let's call it 2096 yesterday, but the bigger supports in the low 90 to 2088 sort of range. Resistance obviously now on the upside reinforced back up into that 2015 to 17 range by the rally Monday that failed right at the bottom of that area. And no real big indication from the short-term trend indicators, because while the short-term MACD is up, that's liable to flip up and down while the market's ranging. And even though the hourly, that was the 30-minute MACD, the hourly, stochastic, the hourly stochastic was turned up just a bit on this cross above the trailing average. If this morning's activity is back below 2100, that's likely to maybe head down toward bigger lower support once again as well. And that pretty much does it for the short-term view of the S&P 500.